Welcome back to Live from Paris, and Owen's back for a look at the day's business news. Owen, you're starting off with an alarming rise in the price of US crops.
Yeah, those food riots we've seen around the world in the last few years, Claire, are a stark reminder of the human impact that food inflation can have, particularly on the poorest people in society. It's true to say that prices of key commodities and foodstuffs have started to come down since those highs of around 2008. But a heat wave in the US and an ensuing drought in the US and other parts of the world are threatening to destabilise food prices once again. William Hildebrandt has the story.
Summer heat scorching Washington, D.C. Record temperatures are being set around the United States, and few people are able to find a break from the heat.
No, it's too hot, very hot.
Weather conditions have threatened crops recently, and food prices spiked in 2011, but since then, they have steadily declined. The U.S. heat wave comes during a year when the country planted some of its largest corn and soybean crops ever. Futures on soybeans are up nearly a third since last year, but a heat wave has threatened yields. The U.S. is one of the world's leading producers in the two crops, but the oppressive heat could lead to rising prices. The U.S. Department of Agriculture thinks the heat wave could deplete corn stocks by around a quarter, and it will be almost impossible to make up the shortfall. It's estimated 96% of all corn for the year had already been planted by May, and more hot weather predicted this week could cause further damage.
So US grain prices remain under pressure. What's the picture generally on the markets?
On the Asian markets, having another good day's trade so far. The Hang Seng once again performing strongly. Those are the numbers for you there across the board on the Asian markets. The Hang Seng around 1.5% up. The Nikkei just a little bit shyer, around 0.5% up. Those markets are having a pretty good month so far. Okay, it's only the 2nd of July, but they are building on those gains they made during the last month or so.
Now, investors seem to have broadly backed the latest Eurozone deal. Do you think, though, that there's trouble looming?
There's always trouble looming after these. We only ever get about a day's grace with these Eurozone deals, Claire. And so it's proved with the Finnish government and the Dutch government teaming up, essentially, to say they're going to block the latest moves by the Eurozone to try and soothe the fortunes of countries like Spain and Italy a little bit. Now, what the Finnish government have said in Parliament is that they will block any buying of bonds on secondary markets or stock markets. And what they mean by that is they do not want this new European bailout fund to get into the business of buying up other countries' debts. The idea behind this is that you and I, for example, we might bet against a country like, or bet on a country like Spain going bust. The idea behind using this a bailout fund is that these kind of countries, these Eurozone countries, would be able to step into the markets and buy up these debts and lower the borrowing costs, crucially, of countries like Spain and Italy that have started to see their borrowing costs spiral to dangerously high levels.
So essentially the same objections are surfacing. The Finns and the Dutch don't want to write blank checks.
Absolutely. What they're saying is we're not going to step in and bail out these countries, essentially, without some kind of guarantee. Now, what the Finns, for example, have been asking for is potentially some sort of guarantees, maybe even putting collateral down against the countries like Finland and the Netherlands participating in this scheme to buy back the bonds of these countries. The problem with that, though, as we've seen with countries like Greece and Ireland, is it just doesn't do those countries' governments any good at all. If you start asking countries to put down collateral, you're then starting to question the creditworthiness of these same countries like Greece, like Ireland, like Spain. These aren't exactly the best or the most creditworthy countries right now because their borrowing costs are so depressed.
Okay, let's now pick up on some more company news. Pharmaceutical giant GlaxoSmithKline is paying $3 billion for violations of drugs that were sold to millions of Americans. The sum paid out by the British firm is the largest healthcare fraud settlement in US history. The US Justice Department says GSK will plead guilty to a number of criminal and civil charges over selling remedies that had unapproved uses.
British lawmakers have called on the chief executive of Barclays to quit over the rate-fixing scandal. MPs want Bob Diamond to follow Chairman Marcus Agius out of the door after he quit on Monday. The bank was fined nearly £300 million for rigging interbank lending rates and leaving customers overpaying on their debts. The UK government has launched a public inquiry into an affair that is believed to involve a number of banks worldwide.
And bankrupt photography company Kodak has been given permission to sell its valuable patents. A US court has ruled the firm can auction off more than 1,000 copyrighted pieces of software for digital imaging that had generated around $3 billion in revenue over the past 10 years. Kodak, which made its name through traditional photo processing, went bust earlier this year, having failed to compete with digital camera makers.
Now, the US and EU embargo on Iranian oil and other products came into force over the weekend. The thinking was that it would send oil prices through the roof at a time when oil prices have in fact been declining. But that hasn't been the case, and it's leading many investors to wonder whether one of the world's biggest oil producers is really as influential as it thinks.
If the EU embargo on Iranian oil was expected to produce a price spike, it didn't materialise on Monday. Oil prices have dipped on international markets recently as demand has slowed, but the cut in supply from Iran didn't push it higher. Iran insists it has plenty of other buyers for its oil.
The main export goes to China, to India, to some other Asian countries. It's not Europeans. Europe has a very small share of the oil market for Iran.
But there are other factors at play too. Iraq's oil industry has rebounded after almost a decade of violence in the country. They're soon set to overtake Iran as OPEC's second largest oil producer. Libya's oil refineries are back in production too, helping boost global supplies.
We don't have a supply shortage right now. And we are it's rather the sort of overhang we currently have of supply, which will be significantly eaten into by Iran.
In response to the embargo, Iranian MPs signed a draft law aimed at banning oil tankers bound from Europe from using the Strait of Hormuz, the key point of access for Saudi Arabia and Iraq. Blocking the shipping lanes to those oil producers could push prices back to record levels.
And that's it for business. Thanks very much, Owen, and thank you for watching. Stay tuned to France 24. We'll have all the latest headlines for you in just a few minutes' time.